Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to stab beyond 69.65, but 70 cents appears to be capping as markets balance renewed US-Iran tensions. Domestic rate expectations also remain supportive following the RBA's Assistant Governor Sarah Hunter's remarks that the policymakers remain prepared to respond if inflation pressures persist. The cash rate stands at 4.35% following 3 hikes this year, although markets see little chance of another increase in rates in August. Meanwhile, the June 16-17 FOMC minutes exposed a divided Fed, with some policymakers favouring steady rates and others keeping further tightening on the table. New York Fed President John Williams also played down the risk of a sustained rise in energy prices despite renewed Middle East tensions. So looking at the technicals, there is a bit of divergence here from this peak to this peak in the RSI, but the upside test here is not fulfilling. And also the lack of the MACD could see another downturn, as we saw previously, and look back towards the region of 69.35, but a potential base holding around 68.70.80, where I do expect another round of demand to emerge, as we've previously seen. The euro, well, the market is attempted to try and gain further, but capped by 115, figure 15. There is a lot of work to do on the top side to get this market potentially bullish and on towards 116, 117, but doesn't appear to be at the moment. And there is a risk of a pullback, and that is down towards the region of 113, 40, 50, where I feel there may be once again demand that we previously witnessed. A little bit of bearishness coming back into dollar yen as the market slips beneath 162 and heading now towards 161. And with the favoured target of around 160 or maybe even down to 158, still keeping that in mind, as well as the unexpected appearance of the Bank of Japan, if they do intervene, to buy yen and sell the US. But it has been a little bit heavy, like we've previously seen, but let's see if the market can play further to the downside. Sterling, well, the market's very strong as expectations of further Bank of England tightening and also greater clarity over the UK leadership transition supported demand. Andy Burnham is expected to become Prime Minister on July 20 after securing backing from 322 of 403 Labour MPs, while markets now fully price in a Bank of England rate hike by the end of the year of 25 base points. Let's see if the market can continue on, and if so, could see this rally on. We see a break of 134.65 to around 135.5. Any weakness likely to be brief, but 133 figure 20 is likely to serve as a base. Well, it looks like gold may finish up down for the week as markets weighed on renewed US-Iran tension. High oil prices have revived inflation concerns, while Fed John Williams also played down the risk of sustained rise in energy prices, adding to the uncertainty around the rate outlook. With the Fed still divided and geopolitical risks elevated, gold remains caught between safe haven demand and the threat of higher interest rates. But we do need to see a break of this trend line around 4,135 to about 4,150 to get a 250-point rally, which could see back up towards the region of 4,400 and reassess, but the technicals are a bit weak, so we may not get it. Finishing up with oil, the market finding a little bit of profit taking and displaying a pullback in the RSI, but overall, I feel since the demand from $67 a barrel, we could see further gains to the upside, but I would like to see a break above 74.5 to fuel the rally on to $78 to $80. A big call, but I feel that this recent slide could see a correction. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest report. I hope you enjoy the great start to the new weekend.